Something just changed in the Florida housing market and may have just gotten riskier for buyers. Prices are moving, but the story behind the numbers is even more important. One county saw a price surge, another saw a price drop. Meanwhile, FEMA just cut nearly $300 million in disaster protection funding. Mortgage apps are spiking, buyers are watching the stock market nervously, and the wealth transfer that's just getting started could shape what happens next. This is the kind of shift most people miss until it's too late. So let's dig in. Let's start with Lee County because there's a lot to unpack here. First, we have closed sales at 209. That's down 38.2%. This is a lagging indicator, so it reflects deals that went under contract 30 to 45 days ago. So it does tell us what the market was doing. Pending sales, on the other hand, are at 352. That's down 12.7%. And this is a leading indicator showing us where the market is heading. Right now, it says buyer activity is cooling. New listings are at 529. That's down 6.2%. Fewer sellers are listing, likely due to higher rates right now, and they can't find something that would make sense for them to move into. So it's either the higher rates or just complete uncertainty right now with the economy. We also have active inventory at 9,329. That's down just 0.4%. So even though pendings are down, inventory did shrink, and that's due to less listings coming on the market. Median sold price is down 3.9% to 390,000. So this is just a weekly snapshot, not a long-term trend, but it does show that there's softening in the buyer competition like we've been seeing back and forth over the last several weeks. Interest rates here are the big news. They went up to 7.21%. That's up 29 basis points. And as you can see here, every bump in rates can freeze buyers, especially those relying on financing. And that's exactly what we saw this week. So what does this mean? Well, Lee County is acting like a market stuck in neutral. Rates are up, prices are slipping, and there's fewer buyers and fewer listings. So it's not a crash, but it's also not the competitive market we saw over a year ago. Now let's talk about Collier County, where the data tells a very different story. Closed sales are at 73, that's down 24.7%. Again, with such small numbers, we can see huge percentage swings week to week. Pending sales are at 97, so that's down 30.2%. We have new listings at 186, that's down 8.8%. And active inventory is at 3,636, that's just up 0.7%. We also see median sold price went up 7%, up to $1 million this week. So we're back into the $1 million range. So even though buyer activity slowed dramatically, prices jumped, and that's not normal. So it tells us that there's something else here at play. These price increases aren't likely coming from typical buyers. They're likely driven by wealth positioning, or in other words, people shifting money into real assets like real estate. Now, here's where it gets more serious. FEMA just pulled $293 million in disaster protection funds from Florida. So that means canceled flood projects, less storm infrastructure, and fewer resources for high-risk areas. So if you're buying in Southwest Florida, this will affect flood zone desirability, insurance costs, and long-term market stability. At the same time, mortgage applications just jumped 20%, refinances are up 35%, and that tells us demand isn't dead, it's just extremely sensitive to rates right now. The moment rates dip, buyers move fast. But here's a twist. Over the last month, 50% of all homes in Lee County were cash deals. Take a look at these two charts. So as you can see from this first chart, Lee County had over 2,400 sales last month. And then from this second chart, you can see Lee County had 1,265 cash sales. So that's over 50% in cash sales. Now when we go to Collier County had 967 total sales. And out of that, 617 of them were cash sales. So that's again over 60%. So this tells us that a big part of the market isn't relying on financing at all. They're reallocating money, whether it's from stocks, retirement funds, or inherited wealth, into real assets like real estate. And that lines up with national trends showing trust-funded and generational wealth transfers quietly reshaping housing demand in luxury and lifestyle markets like Southwest Florida, or in the case of this article, New York City. So what does this all mean if you're a relocation buyer watching this market from out of state? You need to be selective. You need to understand not just prices, but flood risks, insurance changes, and where funding cuts could impact long-term infrastructure. The right home in the right location with the right timing still exists. But this market is changing fast, and waiting too long could mean paying more later or selling for less. Now, if you want help, my free relocation guide is linked in the description. It covers flood zones, top communities, and what most people miss when shopping for homes from out of state. Now, I do these updates every week to help you stay ahead of the headlines and make smart, confident moves. So if this sounds helpful to you, please consider subscribing to the channel. And if you enjoyed this content in the video today, please hit that thumbs up button. It does help the video get out to more people so that they can understand what's going on in our market, and it does help the channel grow. Thanks for watching. Until next time, stay safe, stay positive, and more importantly, stay free.